Hey, what's up guys? Sam here, and I'll be doing the free video for Friday, August 19th, 2022. So another week is in the books. A little bit more of a choppy down week than we've gotten used to over the past month or so. Kind of makes sense. You have OpEx this week. A lot of the shenanigans that go on around options expiration kind of have to come to an end on options expiration. So this is nothing unusual. A lot of this was a gamma squeeze. A lot of this was a short squeeze. And those dynamics are very difficult to push all the way into OpEx. So today you get the somewhat of a reversal week candle. A couple things here to talk about on SPY, because I want to get you guys ready for next week. Next week is going to be Jackson Hole. It's a Fed meeting, but it's an unofficial Fed meeting. They're not actually going to announce anything, but they're going to be out there blabbing and talking, and the market's going to be paying attention. And so this is kind of the Fed's opportunity to signal to the market what it's going to do for September and kind of get in front of that. So in the same way that Powell came out and said, oh, inflation is dead, and that was the market's cue to destroy every put in the world. He very well could say, hey, wait a second, you guys are getting irrationally exuberant, and that would be an excuse to destroy every call in the world. So there is that potential going into next week. Let me show you a couple things. Again, what have we really done so far? All we've done is just pull back a little bit below the daily 8 EMA. Not a big deal, right? The structure's still intact, but it's happening in a very specific way. So in a lot of bear markets, right, like for example, look at the last time we touched the 200. See it? Look what happened afterwards, right? So then we came up here and tested the 200 again, almost to the penny. And the question is, well, did we just come up here, give it a little kiss on the forehead, and then we're going to fall back down? Which would match with previous bear market dynamics. The thing that makes it a little bit difficult to call is that there hasn't been any pullback in this market ever since the lows. You can see that here. It's just been basically straight up from 370 to about 430, which is a massive move. But there's some serious signs of some problems at this point. One, you're starting to get a negative crossover here. If that's not immediately fixed by Monday, that's going to be a very big issue, because this would break the hourly structure, and then that would put you on a collision course with the 200. So do you see how the 200 here, it was falling, and here it flattened out, and you see how now it's been climbing? This dynamic, the hook, call it the hook, down, flat, up, this hook has never been tested. So that would put you somewhere in the neighborhood of right around 408 or so, potentially. So it's something to be on guard for, right? And again, we don't really have any more answers than that, but there are a couple of signals on other parts of the market that are moving a little bit more freely than SPY that don't look great. So I'm going to show them to you, and you can weigh all of this in your own mind as you go into next week. So the first signal here is actually HYG, and I talk to you guys about this sometimes. HYG is kind of the canary in the coal mine that I like to follow, and you'll notice here that this has taken significantly more damage than SPY. This weekly candle is not good, right? This one weekly candle basically wrecks the last 3 weeks worth of progress, right? So it took 3 weeks of progress to do that, and in 1 week it's gone. That's not usually good. You've broken your support level, right? You had a little bit of a support level there at 77.5. So what I told the Gold Room in the premium video earlier was, as long as HYG is under 77.5, I don't think you want to be long. I think the risk to reward is overwhelmingly lopsided with HYG under 77.5. It doesn't mean you have to be short, but I would not be long, or I would certainly reduce my deltas in my long exposure with HYG under 77.5. I honestly think you can outright short it and use 77.5 as a over-under on HYG, but this is not a good sign, right? You can see the cracks here. You can see the degradation of the signals. It's already closed below the 21 after trying to hold there for 2 days. And if this is any sign of what's to come on the SPY, then basically I would look for the SPY to also come down its test as 200, which we just talked about would be around 408 or so. So that's not a good sign. The other one is TNX, which is the 10-year interest rate. Hopefully all of you have paid off your credit cards, because this is not going to be very kind if this signal fires long. But TNX here, keep in mind, and you should be able to answer this question. What doesn't like it if this chart goes up? If TNX, the 10-year interest rate, goes up, what kind of stocks will not like that? The tech stocks, right? Tech stocks. The higher the beta, the more they dislike this. Meaning things like Tesla, Microsoft, Amazon, you know the names. Datadog. The crazier the tech name, the higher the flyer, the more it's not going to like this. You have a little bit of head and shoulders here, but it's trying to reverse it, which is really, really bullish, right? You had a little bit of a head and shoulders pattern here, which could have been very bullish for the market had this actually broken short. But you can see it's actually not doing that. It's actually trying to break long. So this is a very dangerous signal. Fortunately, even if you don't know my indicators, they're so easy to read, you don't really even need to know how to read them. You can just see the signal. Green is above magenta. That shows trend. Red dots shows squeeze. And a green arrow, I think that's usually going to be a good thing. The last time that you got a green arrow was back here, and then from that you got bad. So I trust the green arrows. If this chart goes higher, tech is going to hate it. Tech is going to puke, I would imagine, especially if it goes up in an uncontrolled, fast way. The direct trade on this chart, because if you're looking at this, you're like, well, what's the trade? The direct trade is the short TLT. So TLT puts would be the most direct trade. A knock-on trade would probably be to short tech. So, and the funny thing is, it'd be like the things that we had been talking about in these free videos. So it'd be like the ARK components, right? The higher the beta, the crazier the tech, the higher the multiple. You know the names. Look inside of ARK, all those names. The Snows of the world, the Nows of the world, D-Dogs of the world, Crowds of the world, things like that. All of that will not like this. So it's not yet settled, but the signals here are starting to become very, very strong that rates want to go higher, and that is not a bullish sign. And then lastly, the dollar. So there's a couple things here on the dollar that just keep in mind. The dollar going higher is not usually going to be at the very best, it's going to be a headwind for markets. It's not usually going to be a good thing, especially when it goes up in this quick of a fashion, right? These are big moves in the dollar, and you now have refreshed your buy signal. So you kind of had this flagging pattern into the 50 period, which is common. And then from there, you now have reversed the pattern while holding trend structure and going into a squeeze and having beautiful trend on the weekly. So you add up the trifecta of risk here. You have TNX that says risk is very live. You have HYG, which is a derivative of TNX, but they both say the same thing. And you have the dollar also telling you that risk is very much the thing to focus on. So go into next week with an open mind. I would not go into next week with just thinking, oh, just buy the dip. Buy the dip. You're going to need very good signals. It might just be buy the dip. Maybe the Fed comes out, they say very nice things, they put their head in the sand, they say very nice things, and maybe we continue all the way until September. It's entirely possible, but I do want you to acknowledge the risk as has been shown by these three products: HYG, TNX, the interest rate, and the dollar. One trade we did in the room yesterday was Oxy. So it's always nice when you can catch the biggest stock move of the day, especially on a down day. It's a little bit of luck, I suppose, but the pattern was also pretty good. I'll bring this to you even though it's had a gigantic day. Way more than I expected. I mean, look at this volume just today. That's insane-o levels of volume. And you're going to say, well, isn't it cooked? Isn't it played? It is in the short term. It is at 71. Would I get into a new position here at 71? No. We start holding our positions, but I wouldn't get in fresh here. But I do think you can start adding at 68. If you happen to be so lucky as to get 66.5, I think it's a slam dunk buy. But keep an eye on this one, and the reason being it's right over here, right? So this is the quintessential setup for my indicators. You have a squeeze, you have the trend oscillator correctly positioned, and the last signal that was active on the high-low was a buy signal. That remains active until it's not. It still is. You have a thrust here, you have a squeeze here. So you've basically broken all your key levels here. I like this name. I would focus really only on this name. I think I can give you a sister name that I think plays well, which is going to be something like Exxon, XOM, or even Devon, DVN. But this one just has the best setup. So at the end of the day, if they all move, Oxy will move with it, and it's the best in breed. We also added some UNG today. I did this through $40 butterflies for September. So I don't know if I can call that conservative necessarily, but it's not calls. So we did butterflies here, $40 butterflies. This is going to be for September. Looking to see if this pattern can break out. You'll notice I'm going with UNG and Oxy. I'm kind of going off things like that are not going to be too affected by the rising rate dynamic if indeed those risk signals play out. And in this case on UNG, you kind of have a classic reversal pattern here. This kind of a breakout pattern. You can call it whatever you want, but it is a proper looking breakout pattern. And if you look at the signals, again, it has the signal. Squeeze, correctly positioned trend oscillator, thrust underneath it, squeeze triggers. So it didn't make a new high. It didn't manage to close above the highs today. That's okay. It's OPEX. They had to get it under 32 to screw over those 32 calls. That's okay. We play next week, and we start next week here on UNG with this particular setup here. So I would have this one pretty high on my list to start the week. It doesn't mean it plays out, right? This setup could fail here. You do have a mid-level buy that's active inside the context of a squeeze. So all the signals here are proper. This is the setup. Doesn't mean it works, but it's a probabilities game. So I would probably have this on my screen Monday morning. And if it starts moving out of that hourly squeeze, it should take the top off, and I'd be looking for about 35 to 36 here on UNG. Alright guys, well that is my time. So I just wanted to give you a couple of warning signs there on the things that I think you need to know about. Again, that would be HYG, junk bonds, TNX, which is the interest rate in dollar, and then just kind of show you a couple of things that we're doing in the room here. Just kind of tangential stuff. We're not playing Apple or Amazon or Google or any of that stuff. Not quite just yet. I want to see the indexes kind of firm up. I want to see those risk signals that I showed you kind of chill out. But in the meantime, I do think that things like UNG or even Oxy can continue going forward, pretty much regardless of what the market does. Alright guys, that's my time. As always, before you click off the video, leave us a like. Leave us a dislike if that's what's in your heart. It's okay. Just click a thumb up or down. I think it helps us in general. And it really does help us if you leave a comment. So let us know what you're going to eat later tonight, what your favorite drink is, and that really will help us with the YouTube algorithm gods. If you like our content, that really does help us. So drop us a like, drop us a comment, and if you haven't already, come check us out at simplertrading.com. You can even check the free room, so you can see everything for completely free. And then if you like it and you would like to join a trading community, I happen to think it's one of the better ones out there. So we look forward to seeing you there. Alright guys, see you next time. Cheers. Hey guys, this is Sam, and I'm the Director of Equities at Simpler Trading. I want to thank you for watching this video, and before you go somewhere else on the YouTube, I'd like to ask that you comment and like the video. It really does help us out with the algorithm and getting the message out to more folks who like to see our content. Also, be sure to click the bell notification and subscribe to our channel so that you never miss anything that comes out. If you want to watch us trade in real time using our own money, come over to simplertrading.com and learn how to sign up. I hope you have a great rest of your day, and we'll see you for the next video. Cheers.